In this video, I'm not going to show you the results of one of my expert advisors. Instead, I'll show you how to test it so you can judge for yourself. What are the results? Welcome everyone, I'm Andrea, your automated trader. If you like what I do, don't forget to leave a like on the videos and subscribe to the channel to stay up to date and not miss any of the new content I'll be publishing. So, we will choose which parameters to optimize and what is the best step size, and how to interpret the results we get from our test. We'll use this expert advisor for all these tests, the one based on the Donchian channel, which I uploaded in another video where you also have access to the code. So if you want, you can repeat the same things I'm doing in this video yourself. The first thing we need to decide is the period over which to test the expert advisor. This is a somewhat personal choice. You can decide how to do it. Over 2 years, 3 years, 4 years, 10 years. It's up to you. Clearly, the longer the period and the better the expert performs over a long period, the more likely it is to be robust in the future. However, keep in mind that the past never guarantees the future, so be careful. Now, we might consider a 3-year period just to have some data. Another important thing when choosing the period, you need to check how much data your broker provides, because if they only give you a few years, you'll have to use what you have. If they give you a very long period, you can choose whether to use all of it or just a part. How should you use this period? I usually use a certain period and leave a few months at the end out, maybe 2 or 3 months. So in this case, let's say we go from 2023, from the beginning of 2023 to 2025, up to October, September, let's say September. And this is important because later we'll be able to see, once we've optimized our set of parameters, how it performs on a period that wasn't optimized. In other words, the last period. Another thing we need to decide is whether to use the test. Every tick, real tick by tick or HLC only open or mathematical calculations. I usually always do all the optimization using OHLC1. Why is that? Because my experts always work on the bar close, never on every tick, so I get a pretty good approximation using this model. What do? I run my backtest and pull out the data that seem reasonable to me. Then I finish all the optimization, and of course I also go check how it performs in real tick. Usually, I always have a very small difference, so this allows me to save computation time and possibly even costs. Because if you use the cloud, it still costs money, so the faster you run your tests, the less you spend. Another thing you can do is choose the type of optimization. Let's see, so we can have it disabled and only test the parameters we set in the tester, or use the full algorithm, which is slower. And it will run all the combinations we provide in the optimization, or use a genetic algorithm-based optimization. And on the data, it uses this genetic approach. And it allows you to do fewer iterations compared to the total you would have otherwise. And this is very convenient if you want to run a lot of optimizations. The last option is to use all the symbols in the market watch, so it will use all the symbols. I practically never use this because I make each expert work on one symbol at a time. So I have each one work on a single symbol at a time. So what I usually use is either the genetic algorithm-based one or the slow one. Calculations. I have to do them, right? So if I need to run an optimization with, for example, 1,000 combinations, I use the slow algorithm. That way I can do all 1,000 and I get it done quickly. If I need to run an optimization with 100,000 different combinations, I use the genetic one. So I do fewer. I save time and still get a pretty good result. Then maybe I set some parameters as fixed and vary others to try to find better combinations. In the end, I use the slow algorithm and then run everything in real tick on the last sets I find. I also run the real tick to see how it works in real tick so I don't get any surprises. Now let's take a look at the parameters of this expert advisor. In this case, it's just to help you understand the process. So the specific identity of the expert itself isn't the most important factor here. No, what is truly important for us is to take the time to understand more or less exactly how we go about performing the complex initial optimization process to ensure everything is set up correctly from the very beginning of the project. Let's set it to 1%, which I won't change, right? It doesn't really make sense to optimize the risk just to get the maximum return. I choose a fixed risk and optimize the other parameters to see what happens. Then we have the time settings. In this case, as the expert did, we can't optimize the times because we created them with string to time. So if we want to optimize the times, we need to create them in another way so that they are variable parameters. In this case, it's not possible. And you see here, where do you have start, step, and end? It's not possible to enter any data, so these parameters can't be optimized. What do we have? We have the possibility to optimize this close position at a certain time. Then we go into the expert settings. So we have the time frame. In this case here, we've set it to 5 minutes. Here too, if you want, you can optimize, but by doing this, you end up selecting all the time frames available in MetaTrader. So you have to choose from which one to which one, right? For example, if we set it from 5 minutes to 15, it will go through all the time frames in between. So it will go through 5 minutes, 6 minutes, 10 minutes, 12 minutes, and 15 minutes. I don't recommend this. I suggest you choose a single time frame. So in this case, we won't optimize it. For example, we'll use the 5-minute time frame. Then, if we want to try another time frame, we change the time frame and vary the other parameters, running more tests. This way, you only choose the time frames that are interesting, right? I mean, I don't think there's any expert that needs to be optimized on the 6-minute time frame. Usually people use the main ones, so 5, 15, 30 minutes, or 1 hour. You see, I don't know. I've never made an expert for 3 hours, but you can make your own considerations. Now here, we're really going to consider the parameters of our expert. What can we take into account? For example, in this case, we have the Donchian channel, so we check the box here, and here we let our indicator vary. What makes sense to do? For example, we could do something like this. Let's set the indicator to start at 1 with a step of 1 and go up to 200. Does it make sense? It could make sense, but in the end, you're optimizing very finely. And so you run a significant risk of overfitting. Because maybe you'll find that this expert works great with the value 24, but with 25 it's terrible, and with 23 it's bad too. And so it's not a good combination because you have a single value that tells you, yes, here it's perfect, but then all the others aren't good. Instead, the ideal is to find a value. Good, yes, but also with reasonably good results around that value, to still have fairly good results overall. It doesn't make sense to find a value where you earn a lot, but all the others around it result in losses. For example, right? So in this case, what can I do? I start from 10 and take steps of 10 so I can do fewer steps and identify a reasonably good area. Then, of course, even here, it's not enough for me to just earn a lot with, say, the value 20, because I need to have a reasonable distribution. Let's move on to the next value, which is the stop loss. This is a stop. A percentage stop loss. I usually always use stop losses as a percentage. And how do I optimize a stop loss? First of all, I start by using logic. So if I were to make a trading operation manually, how much of a stop loss would I set, for example, on gold? I don't know, maybe I would set 1.03, 1.05, maybe 1%. So I need to use reasonably sensible values. It doesn't make sense for me to set a stop loss of 0.001, for example, because that would be way too small. So I'd be optimizing something that is not reasonably sensible. So usually, maybe in this case with gold, I set a stop loss of 0.3% to start with, not any smaller. I can even push it down to 0.2%, but I know that means I'm creating an expert that always works with smaller parameters, and that could cause me problems later. Because as I mentioned before, I'm not creating experts that work on every tick and make very small trades. In general, I want experts that can give me maybe 200 or 300 pips of profit with a fairly large stop loss. That's just my personal trading choice. But if you want to create strategies that work with just a few pips, then you need to run all the tests first. On real ticks, you need to have tick quality that's almost 100%, and then you can work with just a few points or a few pips, whichever you prefer. So in this case, we set a stop that goes from 0.3 to what? Maybe let's set it at 1%. That's a large value, but not too large. Even here, it wouldn't make much sense. If I set a stop loss, for example, at 10%, it means it's huge compared to what I want to do. So maybe let's leave it at 1%, but we could also push it to 1.25%. You see, make your own reasoning, your own considerations. The step here, it's the same thing we saw before. A step that's too small leads you to find a trajectory that's perfect during the backtest period because it slips through all the difficulties. But then, as soon as you leave the backtest period, the expert collapses because it obviously doesn't have a stable trajectory. So what do? Maybe we set 0.1 here, just like we did here. Or you can also set it to 1.02 if you have higher maximum values. Maybe in this case, we'll set it to 1.02 now. The next value we have is the risk-reward ratio. So here we're basically working on our target, because in proportion to the stop loss, we define a target. The next value we have is the risk-reward ratio. How do we define the parameters to optimize the risk-reward ratio? First of all, we need to logically consider what values might make sense. So usually if someone is trading, they have a risk-reward ratio of at least 1 or higher. It's rare to use or build strategies with a risk-reward ratio lower than 1. However, if we want to run some tests, we can also consider that. So maybe we start with an initial risk-reward ratio of 0.5. That means we're earning half of what we lose. That could be good if we have a very high win rate. Extremely high, right? So let's not rule it out. Maybe we set it at 0.5. And then we need to define the final value. What final value can we set? Maybe we stick to around 4 or 5? Not more than that, because otherwise we end up with strategies where the good trades make a lot. And then we have an endless series of bad ones that don't go anywhere. And the win rate is extremely low, so it becomes a stressful strategy anyway, right? Maybe you have a risk-reward ratio of 1 to 10 and 90% of them end up as losses. So in our case, for example, if we set it to 3, which step do we choose? Again, a step that's too small. Will lead you to find trajectories that fit perfectly with the trades you're doing in backtesting, but then collapse in live trading because you're overfitting a lot. So maybe in this case, we start from 0.5, go up to 3, and we can set a step of 0.1 or 0.2 if you want to do fewer attempts. So this is kind of how you choose the steps, right? If you have a lot of parameters to optimize, I recommend using just a few combinations for each parameter. Initially, to look for ranges where the expert works well. Then you might want to keep some parameters fixed and vary the others. What is completely impossible to do is to optimize everything with very small steps and, for example, try a ton of combinations. You see that in this case we have 3,000 combinations. If here you have a number that is maybe 30 million or 30 billion, because the more you add, the bigger the numbers get. You'll probably end up finding parameter sets that lead to overfitting, because otherwise it would be too easy. Someone could optimize everything with a tiny step and find the perfect combination that never loses. And so all the experts would make money, but this is unachievable. That's not how it works in reality. Now let's go ahead and run our test, sow our optimization, and see what comes out. Here the test is finished, so let's take a look at the results it gave us. First of all, we have this chart at the top where you see all these dots. Just visually, you can already tell if the strategy we're using makes sense or not. Why? Because down here are all the dots. Red ones, so the trajectories. That didn't work out, that are poor. While above, we have the green ones, which are the ones that give a good or at least acceptable result, right? Depending on the color. So, just visually, when you finish the test, you can tell if you have a lot of good attempts or a lot of bad ones. If everything here were red, it would mean that what we're optimizing either isn't in the right parameter range or just doesn't work. In our case, visually, we still have more green combinations than red ones, so there's something good in what we're doing. Then we have the section below where all the values of the combinations we've tested are listed, so you don't necessarily have to pick the best one because it's not always the most stable or the one you should use. What can you do? You can, for starters, try out the one that gave the highest profit and see what happens. Or you can choose those with the best results, meaning those that perform better, even if they don't necessarily have the highest profit value. Here, it's a bit of a personal choice. You have to find what seems most interesting to you to try and use. Then we have the column. Total trading operations. Obviously, if you take a period of several years, you can't have just 20 trades, because otherwise it's not a statistically significant sample. It's always good to have an acceptable number of trades. For example, 1 per week or 1 every 10 days. At least because otherwise it doesn't give you meaningful statistics. If you only have maybe 10 trades in 3 years, this test doesn't really mean much, does it? In this case, we have about 600 trades, give or take, depending on the strategies we use. Then here, depending on the experts, you have a lot of parameters. You'll have the chance to see very different numbers. But always remember, the more you trade, the larger your sample size, and therefore, the more meaningful it is. Then we have the expected payoff and the drawdown, which is an important factor, and we can have a result like this. Of 10,000 with a result that has a 10% drawdown, or maybe as in this case, though we do not have it here, but maybe we have a result of 9,000 with a 5% drawdown. So in this case, I always go for those with a lower drawdown, even if the profit is lower, because if I want, I can increase the risk a bit. The drawdown becomes like the other one, but then the profit is much higher, right? So, in my opinion, it's always best to use strategies that have low drawdowns. Because if something goes wrong, at least I'm starting from a low value. Then, in the last part, we have the values from this test that were used and the parameters that we optimized. So for example, in the first case, we have the candles of the non-can channel, which are 10, the stop is 0.9, and the risk-reward ratio is 2.9. What is the next step we need to take? First, let's choose a trajectory, a result that we like. So you should choose this based on what you want. Just pick the one that seems most interesting to you. So let's pick a value we like, for example, the first one, the one that earned the most. And let's take a look at how this test performed. So let's go into the settings, turn off the quick algorithm, set it to disabled so that it only tests that set of settings and start it. You can also just double click here. And the test begins. Let's look at the chart. You can see that the chart is following its trend. There was a moment when it was rising nicely, then here it had a bit of a drawdown, and then it kept going up. So this is the chart that comes out of the optimization. Now the next step is to look at this period that we set aside at the end of the test, to see what happened, to check if our strategy has some stability, or if as soon as it leaves the backtest period, everything collapses. So we have a bit of overfitting. Let's take a look. Let's set this to 2026 up to the 1st of January. The last few days don't matter anyway, so let's run it again and see what happens. You can see that the trend is the same, obviously, since the parameters are the same. We can see that we had stopped in September, so we were here, then it went up a bit more, and then it went down. But realistically, it's a trajectory that's not that great. This is because, in any case, right after the optimization, up to today, we basically haven't earned anything anymore. We gained a bit, then we lost a bit. You have to evaluate whether it's worth using or not. These are choices that everyone has to make for themselves. It's not like I can explain to you, use it or don't use it. This is something a bit personal, where each person has to evaluate for themselves. Maybe in a case like this, you could take the expert, run it in demo mode for a few more months, and see what's happening. If it picks up again here, then maybe it's actually a good expert. If it keeps going down here, it's clear that it's not a good set of parameters. The best thing would be to have a period where it keeps going up, like in the past, so if we didn't have this. But this kept going up. In fact, even during this period, outside of the optimization, it was still a good thing, so maybe it was an expert worth trying. Then the next step is to do the same work on more results, so you can see how they performed, how they didn't perform, and whether they're stable in the following period. So now, for example, we might test the one with the highest results, or maybe we change it and pick one with a bit less drawdown, like this one here, just to get an idea, and let's see what happened. Let's still leave it up to today, basically, and see what happens. You can see that the chart here is different. But in any case, it still had this period, this drop in the last few days, in the last few months. So from September here, we went up, we went down, but we still made a profit. It might already be better than the other one. It's not mandatory to pick the one that earned the most, but it's good to choose the one with the best performance in the backtest. Let's maybe take this one here, which is the most profitable, and see what happens. This one is different again. You can see that it has a pretty flat final period, and then lost value in the most recent period. So maybe it's not an optimal trajectory. Yes, it earned more in the past, but as you can see, in recent periods it hasn't performed well given the current market. So I usually prefer one that earned a bit less in the past but has done well in the last year, maybe in the last 6 months, because that means it adapts well to what's happening today. The last step, let's say we found that this first trajectory appeals to us, it's stable, it seems good, and we want to use it. Before applying it both in demo and later, perhaps even in live trading, I go and run the same identity test I did before. But in Realtic, so here I set it to Realtic based on the T-Real data, so as to have another comparison. This test needs to be similar to the other one, the one we did in OHLC for the trajectory we chose. This is a very important point, because if you have an expert that works on fairly large values, let's say, then there won't be any difference between switching from the OHLC model to the Realtic one. If you have an expert that does scalping or trades on very small values, here you could ruin everything. Because in OHLC, you optimize and stretch things a bit, optimizing almost on the OHLC model, then you switch to Realtic, and everything collapses. So you could really have incredible curves in OHLC and then disastrous ones in Realtic. In reality, you should have similar values. So maybe if in the end I have a 10% or 5% difference in profit, that's reasonable. More or less the trend is the same, so I've modeled it well. So, to conclude this video, I want to tell you that a test, a backtest, it doesn't serve to prove that an expert works well. It serves to show that the idea is good and should be pursued. And always remember that the results you get from a past period offer no guarantee for the future. If you like what I do, if you enjoyed this video, leave a like, don't forget to subscribe to the channel, and stay tuned to see the next videos I'll be posting. Let me know in the comments if you have any questions, curiosities, or if you need a hand. Maybe you want to optimize an expert you're using and aren't sure which parameters to use.